Morning, market chameleons and Mr. Pargamonic. How are you doing today, D?
Good morning, Will. How are you?
Awesome. Wild ride in GameStop yesterday, huh?
Yeah, that was pretty interesting. What do you think happened?
You know what? The flow of capital in and out of that, obviously the market makers, it's super hard to support that stock. You know, one seller shows up and it's like whoosh. I
Yeah,
don't
it
know.
was
The
like
chart,
a flash crash.
yeah, it was like a mini flash crash. Incredible. All right. With that, we'll go to the disclaimer. Take a quick disclaim away. Hold on.
Yep. So good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer.
Is anything moving in the pre-market this morning?
Yeah, I'm going to share my screen real quick. We'll take a look at the pre-market movers. I think we'll take a look at some upcoming earnings. I think we'll also take a look at the option block trade screener. We stopped yesterday. We had some questions on that. If you have any other questions along the way, let me know. We'll try to get to as many of those questions as I can. So these are stocks trading in a pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm going to first take a look at stocks with higher market cap, see what's going on in that sector. So I'm using this filter, market cap 20 billion or higher. So we got 88 that made the percentage gainers list, 10 on the percentage decliners list. So from that perspective, looks more like a bullish bias at the open. On the top of the list, that's Roadblocks. So they just went public yesterday. Is that correct, Will?
Yes, they did.
Yesterday. Let me make it sure.
Yeah, actually, there was a chameleon who asked where you could see new listings, and you went through a whole presentation on how to find that information.
Yeah, and I'll take a look at it one more time today, just to navigate to it and show where that is. But second day of trading looks like if we open here, yesterday rate traded between $60.50, $74.83 in the pre-market hours. Right now, up 13.5% at 78.85. So that's where we are now, 2.3 million shares trading. The ILI up 8.7% on 220,000 shares. EDU 78,000 shares, up 7%. So I don't see just the NIO trading 2 million shares in pre-market, up 6.5%. I don't see any other ones that are very active on a relative basis. These are pretty high market cap stocks. Let's take a look at the unfiltered report. See what's going on there. So we do have, making the top of the list, as usual, some of these lower market cap stocks. We have here NVFY, that's up 225% on trading 11.6 million shares in the pre-market. That's a $13.3 million market cap. ENTX up 146% on 6.4 million shares. That's a $33.7 million market cap stock. That looks like it's a biotech. It has some news out this morning. SEIB up 61% on 2.2 million shares. And that looks like, is that earnings? Maybe they reported earnings. That's what it looks like to me. But nothing else sticks out at me right now. So just to save time, unless you have anything on a pre-market report, maybe I'll go to see what's coming out today as far as new listings go. Then we'll go to the earnings. Then we'll go to the option block trade screener.
Great.
All right. So yesterday we did have a question. What's coming out today? New listings, new IPOs. So we go to this morning report right here, and this will show us in this top section. So new stock listings. So these are stocks that are going to start trading today on these exchanges. So this is the symbol, this is the name, This is the exchange that it's going to start trading, and today will be the first day. So you could see this full list going up to today, March 11th.
And it's amazing. Every day new SPACs are listed.
Yeah, and this is a SPAC. So are these units? Is that what the SPACs are? Is that how they're listed in these units?
I think some of them are, where you see Acquisition Corp, those are SPACs down there as well. It's interesting.
So here's a big one. I think this one, Coupang, that's a Chinese internet company, I believe. So this one, that's going to start trading today, and I think that one is also like a internet. I think similar to like Alibaba, I believe, but that will start trading today, and I think that one is like one of the bigger ones that's going to be IPO. They were talking about it, I think, on probably CNBC. I saw it in a couple other like major press release. Here's another. I'm just curious these acquisitions because I can't find a lot of information on them, and I'll start looking, but it's interesting because I'm seeing a lot of them, so they must be popular. Whenever NASDAQ New York starts to do this, they're starting to probably see some kind of a demand for them.
I think there's been over 250 this year.
Yeah. So here you go.
There's been more of these special acquisitions.
Going back a couple days. Yeah, look, I'm going back a couple days. Some warrants being issued. I'm going to see if I could find more information on them and start importing that data. But so far, that's hard to come by.
So yesterday we had a new symbol, roadblocks, which they were asking about. Now, when the options, how soon after the stock is listed do those options come out?
I mean, that's up to the exchanges, right? So let me see. The roadblocks should be in here, right? So they got listed yesterday on the NYSE. So you could come down here and see if any of the options exchanges. So these are from today, March 11th. We see two stocks that got listed on these exchanges. These are the options. As far as like how soon, it's really up to exchanges and the market makers. If the exchanges find market makers that are willing to make markets in the stock, then they go in there, go through their like regulatory process to get those listed. But I'm imagining that it'll probably, just because it's popular, probably sometime soon we'll see it come out. So usually those popular stocks, they find some specialists, some market makers willing to start making markets in it. And I'm imagining, but we'll keep an eye on it. So I don't see it here today as part of unless they did it the same day. I can't imagine them listing it the same day as the IPO. But we'll keep an eye on it. So far, I don't see it. But here's where you could go: new stock listings, new option listings. See what are the new listings today. Here we could take a look at things that are coming up as far as market events. Right, so you got like treasuries, natural gas, jobless claims. So these are the times. So another thing you just want to keep an eye out in the morning. Make sure are there any type of market moving events coming up? Fed meetings. Sometimes you have speakers talking, and a lot of times when those speakers come out, Fed speakers, they could move the markets too. People are paying attention to what they're saying, and they might give clues how they're feeling about the economy. So that's important as well. Again, this is in the morning report, stocks morning report over here. If there are no questions, I'll move on to earnings and then option block trades.
Very cool. Thanks, Steve.
Yep. Upcoming earnings. So take a look what's coming up in the earnings front. I'm going to use this report. We got different tabs. I'm just going to stick maybe to this full report next 2 weeks. The first thing I just want to do is look for more liquid options, stocks that trade more options. on average. So I'm going to use this and look for stocks that trade on average 5,000 option contracts or more per day. And let's take a look at the full report. So this will give us a list of stocks over here. And these are the expected dates that they announced they're going to report earnings. So you could see today, this is today after the market closed, and you could keep going down up to for the next 2 weeks. So here, let's Docusign, that's on the top of the list, trades 35,567 contracts on average per day. That's in options, expected to report earnings today after the market close. And we're looking at the straddle right now. So this is what the straddle, it implies the magnitude of the move in either direction, right? So as options traders, we're looking at volatility. You're buying the call, buying the put. The stock needs to move enough if you're buying it to cover the entire premium you paid for the call and the put in either direction. So it has to move away from the current price by enough of a percentage to cover the cost of that premium. So right now, it's implying, the straddle is implying a move of 8.7%. How does that compare to how the stock historically moved after reporting earnings? So in the last 4 quarters, the average move in either direction, 7.2%. The average move in the last 12 quarters, 8.4%. So we see today's implied, or as of yesterday's close, that's 1.5% above the 4-quarter average, kind of in line with the 12-quarter average, a little bit above 0.3%. The high move Docusign made after reporting earnings in the last 12 quarters, 21.7%. Last 4 quarters, high move, 12.6%. How does today's implied straddle compared to historically how the straddle was priced on average? You could see the straddle was pricing an 11.6% move in the last 4 quarters, 11.8% in the last 12 quarters. So from that perspective, the straddle looks cheaper coming in than historically. I'm going to go back. I'm going to go deeper into Docusign, actually. Do you see any ones you want to go over, or just go to Docusign?
Yeah, no, Docusign's a good one to look at. I mean, it's
All right,
been a
let's take a look
big
at that.
stay-at-home
Going to stay at home play.
I know we
Yeah.
have Jen, our favorite realtor from Boise, Idaho. I know these realtors are using Docusign,
Yeah.
to close virtually, basically. So there's a lot going on with the product.
Yeah, no, it's really good. You could do it all through your mobile device. You just like click your signature really quickly, and it's all saved. It's emailed to everybody. It's a nice tool. Let's take a look at how the stock reacted after reporting earnings versus what the straddle was implying. So these bars up here, this is what the straddle was implying to move up or down, right? So here we start at 0. You could see the straddle. That's how much it had to move up or down to cover the cost of the straddle. So, for example, the one I'm hovering over right now, December 3rd, after the market closed, Docusign reported earnings. That day, stock was up 5.3%. The straddle day before was implying a move of 8.4%. So that move was more muted than the straddle. Here, you could see on September 5th, 2019, Docusign reported earnings. They were up 21.7%. Day before, the straddle was implying a move of 11.5%. So that move busted right through the straddle. If you sold it, you had to buy back higher. It was a loser from the sell side, winner from the buy side. If you see a red bar, that's just indicating that the move was to the downside. So June 6th, 2019, Docusign reported earnings. That day it was down 12%. Straddle was implying a move of 10.9%. So you could see that it moved, it went below where it moved more than the implied straddle by a little bit. So if you sold it, you had to buy back higher. Let's take a look at the stats. So in the last 12 quarters, the straddle overestimated the move 82% of the time. On average, the straddle was implying a move of 11.8%. versus historical realized move of 8.4%. So you could see here that most of the time, right, the move was more muted than what the straddle was implying. That's what this is saying. So a couple of times it busted through right here. This one by a lot, this one by a little, but it was within. And these brackets, these bars here kind of tell you, and you could see here that they've been all over the place, right? It doesn't look consistent. Sometimes they're wider, sometimes they're narrower. So there's not a lot of consistency from quarter to quarter, because I see a really wide one here, wide ones out here, smaller ones over here. So just keep that in mind. It's not very consistent here. It looks to me like on the lower end. Let's take a look at the implied volatility really quickly, what that did, and then I'm going to look at the numbers. So here we're looking at a 30-day constant maturity option to see what the implied volatility did from the day before to the day after reporting earnings. We're looking at a volatility crush, and we're looking at a 30-day option because that has more vega than near term. They have more gamma, so you're playing the move more with the near term. As you go out further, there's more implied volatility. So you're playing the implied vol crush as you go out further. So 30-day constant maturity, we see that on average, day after reporting earnings, the implied volatility was down 30%. Day before earnings, the implied volatility on average 74.5. Day after reporting earnings, implied volatility fell to 52.2 on average. 5 days later, 50.7. So continue to decline a little bit. Let's take a look at how, I'm just looking at these numbers up top, and it just does, the more I look at fundamentals, the more I'm like, whoa, these things are priced high. But let's just take a look really quickly from a fair value perspective.
Well, it's interesting because Jake is the one who's asking for the fundamentals the most, and he's been, communicating these fundamentals just don't look right for a long time.
They don't look, and we've seen the thing with stocks is that they'll probably stay undervalued for a much shorter period of time than overvalued, right? Because undervalued, you're going to find people who are just going to go out, like start buying companies. If you're getting good returns, you'll take them private or you'll start buying them. When they're overvalued, there's not much you could do, right? You could short them, but they could continue to go.
Yeah, and we just
overvalued.
We just witnessed how painful it is to be short, right?
So there's not
money
much.
Managers lost billions of dollars.
They could stay like that for a very long time, and sometimes it proves right. Sometimes those earnings catch up. Eventually catch up, but sometimes they don't. Eventually they get crushed. But you don't have a lot of cushion here. When you're investing in these, you got to be really right. So just here, I'm just comparing this to how, where the historical price to sales was in the last 3 years in Docusign, right? So if we go, it doesn't have any earnings really, it's all over the place. So it skips this, but just looking at the average price to sales ratio 19, which would be considered, I think, pretty high. Here, I'm going to click on this just to show you how, this is how it just zoomed up, right? So price to sales is your market cap divided by the sales, your total revenue, right? So this is market cap expanding much faster than the total revenue. And you could see how far it expanded. And look, I like Docusign, nothing about the company. I'm just looking at it from the perspective of, valuation. If we compare historically, how did that measure up versus the rest of the market? So we see here that today, the Docusign price to sales 30 versus the SPY 2.9. So it's like a 900% premium. 3-year average, it's at a 672% premium. So if it goes to that, these are the implied values. This is the average. So you could see here, multiples expanded by a lot. I'm going to take a look at, here, let's go to the earnings estimates.
Talking about the DocuSign and the sales, you got to wonder how much ability they have to raise their prices. Once it becomes embedded in a client's, process, right, for dealing with clients like Jen, who's one of our longest active chameleons, who's also a realtor. She's saying it's, time is money, right? And it has it has shortened her time where she used to have to sit and point out to clients and mark, it does all that for you, right? So the client is just click here, click here, click here. If you haven't clicked all the right boxes, the computer tells you got to go back to this box and click it.
It's a good product. That's, what do they say? If you don't have to invent a new product, but if you could create something that saves you time, people will pay for it, right? Because time is money. So if it saves you time or makes things easier, simplify, people will pay for it. And DocuSign figured that out. And I think it's a great product. I'm just looking at it. Okay, your market cap, is 30 times the revenue, right? So revenue it's not a PE already. This is just, you have to make some kind of margin out of this. So it's 30 times its sales. I'll just take a look. Here's the last report, December 3rd. The stock was up 5.3% after reporting earnings. It beat by 9 cents on earnings per share, beat on revenue, 21 million. You could see for the quarter made $382 million. And it's been going up. Look, from 155, it seems like consistently it's been growing, which is a good sign, right? It's just how much do you assign it? Let's just go to the press release real quick. I'm just going to take a look at it if I could figure out their margins. So here, look, total revenue grows, they're giving you the highlights, 53% year over year. That's a phenomenal growth rate, right? Here's its subscriptions, 366 million. Gross GAP, gross margin, 74%. That's a lot. Gross margins, 74%. That's a lot. You probably, that's on the high end. You're talking about probably like biotech and software. That's where they're at. Non-GAAP income 22. So look, they do have some good, good numbers. Is it worth the 30 price to sales? Here's some, new products. So maybe people are excited about these new products. I'd have to read more about them, but they do have stuff in the pipelines that could boost their revenue. They're giving you outlook here. So these are all important to take a note of. They're giving you here, look at the outlook that they're giving you, 404 subscription revenue. So that's higher than, right? So you could see here, they're expecting 407 right now is the estimate. So from fourth quarter to fourth quarter, 265, 404. That's a substantial growth rate. Again, you got to catch up to that. Price to sales 30, S&P 2.9. Let me just see what it did post earnings drift, and then I'm going to move on. But here's how are investors, traders feeling coming into the earnings, right? So after reporting earnings, you could have a good earnings, you could have bad earnings. As we saw, the press release gets issued, people put those numbers into their models, they reprice it that day. What happens the next 3 months? That's expectations being built up into the next quarters. What are the numbers? What do we think the management is going to guide us to and say? So here we see historically between earnings, on average, the historical drift was 19.8%. So on average, they went up 19.8% between earnings. These are the graphs here. I'm going to come down here. Okay. On its average in the last 12 quarters, it moved up 19.8%. 60% of the time, it drifted higher. 40% it drifted lower. So you could see some big moves. It makes some big moves here. Standard deviation is 36.4%. So what did it do this time around, it was down 12.6% since last reported earnings. Here we are, down 12.6%. So even here, you know, with good guidance, with the market going up, it's having trouble, you know, pushing prices higher, you know, and I think it's this valuation already. You know, I don't think it's anything wrong with the company, just the valuation might have gotten ahead of itself. So we only have 5 minutes left. Will, do you have any questions on this?
We did have a question. Let me go back. There's so much chat going on. It was from Robert Black. He says, is there a way to scan all stocks to see the difference between the valuation and the SPY that Dimitri was just pointing out? This was maybe back a little bit. It seems that
so he's talking about to scan this. So no, not right now. But
hey, D, you've gone underwater. Your noise, your sound isn't working. I don't know if you want to check it out.
Should I log out or can you
log out and come back in. All right. Everyone, I'm assuming heard Dimitri's sound is bad. We have, thanks to Mike Moreau, he just sent up a microphone. We got a new microphone on order. Hopefully that will help that out, even though I've been told it may be a Zoom issue. For those who don't know, Jake is a published writer on Seeking Alpha. I did post a link in there to one of his newer articles. Always worth a read and a follow for Jake44. Check him out on Seeking Alpha and in the Discord. For those of you who are active and you want to get into the Discord, I can send you an invite. Email me at williammcbride.com. Hey, D, good to see you. You're back.
Yep. So the question was, you know, is there a way to scan for this?
Yep.
This is a relatively new feature, and I'm still enhancing it. So I think you don't see it even on this version, but we're adding, besides PE, price to sale, I'm going to add price to book and price to operating income. You know, so before we even get to the screeners and stuff, I'm still enhancing it. The other thing what we're doing is, so this is looking at how the valuation compares to historical levels against itself. I'm also adding forward looking. If we do assign it a growth rate and an operating margin, this is what we're going to be looking at for the next 5 years. And we compare that to the overall market. How's that price, right? So we're going to have two models, one looking at observable data, historical data, one looking at a projected growth, right? We can't accurately project it, but we're going to use the data that we have available to try to see how does that measure up to the rest of the market, to see, is it, if we give it growth, you know, is the growth overpriced or underpriced? So that's the thing we're working on now. So you're going to see two models coming up for this implied value. Okay, so it's not complete. This is the first version that I rolled out. So that's hopefully answers that question. Well, we only have 2 minutes, so I'm not going to have a chance then to go into the option block trade screeners, but you know, I'm going to just really quickly just go to that, the option block trade screeners. You know, this is where people go to try to find ideas based on where there are big trades in the options. There are a lot of them, so you have these filters here to kind of narrow down ones that you're most interested in. We did create over here some presets. So like, for example, bullish flow. I'll talk about that maybe tomorrow, but you could see here, once you click it, you'll see the presets that we picked. And the idea there is it's trying to find some places where there's option flow that's acting in a bullish manner with confirmation in the direction. Okay, so you got like AVEO yesterday showed up, STPK, General Motors, MOS, Boeing. So these are, you know, things that I'll try to talk about tomorrow, and we'll talk about more of these filters. But if you go here, you know, you do see some presets, and it highlights the filters that were selected for it.
Excellent job, Dima. Thank you so much, buddy.
All right. Thanks everyone for joining us. Stay safe. Have a great trading day. Hope to see you guys tomorrow.
Hey, chameleons, have a great day trading.